Hey guys, Mike here. So definitely an interesting day because it was the first day I can remember in a long time where we had no economic data to shift the market around, no short squeezes really going on or anything. And so it was just kind of like a, slightly green day in the indexes. I think something we kind of expected because we talk about over the weekend, right? We have to digest the enormous move made last week, which we're going to talk about in just a minute. And really the two big things this week is you don't really have a lot of data this week. But the two biggest things that's going to happen is going to be those bond auctions at 1 o'clock for the 10-year and the 30-year, right? Because that's going to affect yields one way or the other. And so if they go good, yields should either stay the same or drop. And if they go bad, yields would spike, which means it might be a headwind for tech and things like that, which is what's leading this whole thing. But we're going to get into all that. But something else, really important thing about here, and I told this to members and everything starting out, is this right here. This came out today from Goldman Sachs about last week, and it's like hedge funds last week aggressively bought U.S. stocks at the fastest pace in 2 years, with traders jumping into a stock rally fueled by hopes that the Federal Reserve, wait for it, interest rate pause might stick. And the week up November 3rd, global funds bought up U.S. equities in the largest 5-day buying spree since December of 2021. It's almost 2 full years. This left some caught off guard in a squeeze, and yes, those shorts got absolutely crushed last week. And obviously, a lot of them ended up losing a lot of money because they just refused to close it out and thought we were going lower. Now, touching base on the second largest economy in the world here, you have this headline today saying that President of China is expected to have dinner with some Americans' top CEOs while he is in San Francisco. Now, why would he be doing this right here? And that is very simple because this data that came out today as well shows this is FDI, which is foreign direct investment measure, turns negative for the first time since 1998. 25 years. You can see it's just been declining over the last few months anyway, right? Because people just don't trust the government over there. They don't trust them. They know the real estate market's a mess. And that's why you see headlines like this. And that's why he's over here talking to businessmen. He knows if even Apple, their biggest private employer, is saying, oh yeah, we're going to try to diversify to China, others will follow suit, which of course is why you're seeing, whether you like them or not, Chinese stocks compared to ours are obviously really cheap because they've just been beaten down for 2.5 years at this point in time. And you're seeing some of them try to make a rally or whatever, but there's just no trust in the government to be able to save their economy and to fix the real estate problem they have over there. I don't know how you fix it either, but at some point in time, we'll see if it's like the U.S. where, people start investing in stuff when they think it's bottomed out, even though things still look bad over there. That's what you got to try to pay attention to see if that's what they're going to end up doing. But we've seen it. They've just been pulling out a lot. So we'll see if he can talk the American businessman, into giving them some money or continue to reinvest and say, trust us, we promise we won't do anything that, dictatorships do and stuff. We'll take care of your money because, when people lose money, they're like, forget this, there's other place to invest. And so they get sick of it. Now, looking at today and what really caused more high beta stuff to sell off was this right here. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. Yeah, the dollar green most of the day. The yields were all up. Oil's up. U.S. dollar versus Japanese yen's up. VIX is up. What's funny though, the equal weighted ETFs, they were red all day. They were down about 0.75% most of the day, about 0.5%, 0.75% that is, which means, you knew you didn't have a lot of participation. It was just the Magnificent Seven. And you can see as you go through here, you're not going to see a whole bunch of green, but you'll see a whole lot of red. And a lot of this is profit taking because these stocks have been up massive over 5 days. You had to have it at some point in time to digest this, right? All of these, except for DraftKings, by the way, which I think it's going to 41. Could be wrong, but I think that one's going to keep going. But when you look at most of them, of course, because these have been up, literally 15, 20, 30, 40% in a 5-day span, of course, they're going to end up selling off a day. So no surprise, especially with yields going up and everything. And again, Chinese stocks getting a little bit of love, but a lot of these are just deep red. And the only thing that held the market up all day was Microsoft, Apple, your Magnificent Seven. That was really it. See Square getting some love there still. People still buying into that one. Semiconductors were definitely mixed, but there's your Magnificent Seven. I like to call them the Mag Seven, and really just the top two, which make up 13% of the S&P by themselves. And another thing to watch out for if you're looking whether or not this is going to be like a correction or just going into a bear market. is watch your, your risky stuff, see if it's outperforming what will be more defensive, right? So you got your XLK, XLY, which is consumer discretionary, XLK, is tech, XLC is communications. Well, they're in the last 5 days, they have outperformed what you consider to be defensive, which would be your staples, your healthcare, your utilities, right? And so just keep a close eye on that. If you see the 3 at the bottom flip over on the other side, that usually means people are going defensive, which could be more leading towards a bear market, but you're just looking at correction if your aggressive stuff or the riskier stuff stays on top here. You see where the money's flowing. Now, Portland SPY, what are we looking at? You got this trend line where we've rejected multiple times right here. Again, that is resistance. I just want to see if it's going to form. I think most people want to see if it's going to form, because it would be much more healthy if it forms a right shoulder on this head and shoulders right here before it does a breakout. That's what's going to be the case right here. And then when you look at the Qs, you look over here again, there's that trend line, 1, 2, 3, 4. It got up there this morning, rejected off, which I think everybody expected that, right? I mean, I would have thought it would come down even harder, but it didn't, because there's no news to drive anything, and nothing was really happening too much in the options market. But again, you got all these what they call regular trading hour gaps where it's gapped up many different times, right? The ones actually had gapped down, but that don't mean they got to fill, right? These were gap ups right here, and we never came back down and filled those. So you can see the same thing right here. But again, I think a lot of people are going to watch probably around like 360 will be a good level to come down to grab some liquidity, take out some of those gaps and everything before you get a move up. That's what's going to be happening here, which seems to be the case unless something crazy happens. I mean, there's really nothing going on economically. Now, what was the market all about today? Apple, right? Apple broke out finally out of this falling wedge pattern. I mean, it's been in here since like July. So finally it breaks above that today. And there's a reason that it did this, I truly believe, which I'll talk about in a second. But, when you look at it, obviously it's the biggest one out there. And you can see it's above its 200, just got above the 50, heading towards the 100. And that is, once it gets above this level over here, it's going to be thin air, because when you look to the left up the top there, that is all-time highs up there. And so if it can get above that 100 moving average, start breaking above, it's just not a lot of resistance to hold it back if it gets above that. And so again, all-time highs right there. And you look down, you got your RSI over the 50. The MACD's trying to move up. You get up over that 0. I'm not going to say momentum's like huge going into this, but it's heading up. And so it's something you got to keep an eye on. But the reason why I think Apple is like, you know what? I got to stay strong today is because I put this in Discord this morning. But like for the first time since I can remember, Microsoft is trying to eclipse it as the #1 weighted stock on the SPY. And so you can see that was this morning. I don't know where they stand right now, because Microsoft's on a freaking tear this morning. I mean, it looks better than any of the Mag 7s when you really look at them. Because, I mean, this thing is almost near all-time highs. Look at that. Just green candle after green candle. End up filling that gap as well. There's no resistance up here. I mean, it's going to double top and sell off, or it's just going to bust right through it and keep going. I mean, you can see that the overbought stuff in the RSI don't matter, because look how far it was overbought over here. Stayed there for weeks, right? Look at that. I mean, there is some strong momentum trying to push this thing up. And again, we'll see what happens if we double top, sell off. But right now, there's a lot of strength going into it after this earnings, because this earnings were way better than Apple's. And I mean, there is growth. They got the cloud. They got all kinds of stuff going on for them. They just don't buy as much stock, as Apple does, and they don't pay as big a dividend, right? And so, you look at the moving averages, they're looking good. The 50 is about to cross back over the 100 to move up. 200 moving average looks good. So it looks strong. I think it absolutely deserves to eclipse Apple as the #1 stock. Let me know what you think in the comments about that. And then we move into Tesla. This is all about the traders today, right? It gaps up right here. You can see that's the RTH gap marked right there. Ends up moving up to prior day's high / prior week's high and rejecting immediately where it sold off for the majority of the day. Coming on down, end up filling that RTH gap all the way, and then broke down below the previous day's low, which was also Friday as well, and really started to sell off after that. But when you look at this, it's no surprise where it stopped. You start scrolling over and you look at the level here, and I said, figure out what fair value gaps are, because that's where it stopped. It mitigated this fair value gap. That's where it got its bounce for the day and did not come back down and retest it again. And, looking at where this can head to, I mean, when you look at this, I didn't see a lot of call volume today, which, of course, why it sold off and everything. But, the biggest thing you gotta look at is C, I'm going to get rid of this RTH gap right here line. You know, you're looking at resistance at prior day, prior week's high until it gets above that. You got this trend line right there, which is rejected off of multiple times now. So, you know, looking at where the resistance is, that's where it's going to be at. Starting off tomorrow, we'll see if we get another gap up or gap down starting out, because obviously down below, you got this big gap right there, which is the RTH gap. And so that will put it back in that battle zone between like 202, 212 area right there. And so, you know, we'll have to see where this wants to go. Again, it'll probably follow the market, which is what it did today, because everything started basically selling down at the same time. So, you know, let me know what you think in the bottom right there. Like I said, I'd much rather buy a Tesla at 206 than buy it at 240. You know what I'm saying? So, Amazon. Now, Amazon was another one that's strong today, and I'll show you something about Amazon that might surprise you. This one has that trend line, which has been rejected multiple times. It could just sit here and wedge, as we are right now, even with the strength it's had, because it's had such a nice move up since earnings right here. But again, the air starts to get a little more thin where it's at. What's fun about Amazon, look at the increase in institutional ownership over the last basic year right here. I mean, that is a huge increase in institutional ownership, which is why it would be harder to actually try to move this thing down, and why it might absolutely stabilize and continue to move higher, because so many people have bought into this one. And I was shocked when I saw that, because it's such a big mega cap name. So, you know, keep an eye on that. And AMD, of course, looking at this one, just took a breather today. It's up here in the supply zone, which has always been major resistance for quite a while right now. But again, if it busts above this, you know, you're heading to around 119 right there would be the target. And then above that, you're going to look at around 125. And you can see, I mean, momentum's, you know, it's good behind this one. Obviously, it's in a resistance zone right now, but we'll see if it can break above, since semiconductors seem to be doing pretty good, at least the big ones. Because you got NVIDIA, what's it do? It comes up there, it fills this gap right here. So we knocked that one out. That's where I actually stalled for the day. But again, this is another one that the air is starting to get really, really thin up here for this one, because when you look over to the left, you know, we're talking about all-time highs over to the left, which isn't that far above, right? And so your next target you're looking at is around 471 if you can get there. And then above that one, I mean, all-time high is only like, what, 503 or something? And the way this one's moving, and with earnings coming up, you know, it's going to be a big deal to see what they do during earnings. But again, that Head and Shoulders is totally invalidated now. So, and that's why I always say, and I'll continue to say, it's NVIDIA, right? It's kind of like Apple, where it's treated differently. So this one continues to push. Now, earnings tomorrow, you're going to have Uber, Celsius, Datadog, which is cybersecurity, D.R. Horton, one of the builders. You have the mortgage rates coming down, so it'll be interesting to see how that earnings call goes. Then you have Rivian, Devon, Upstart, Oxy, Wish, Mosaic, and Gilead. Then, when it comes to economic data, you ain't got to worry about nothing, right? You come through here, all you have is Fed speakers. You have a 3-year note auction at 1. If that goes bad, then we're in real deep trouble, which, I mean, I don't see any issues with that. It's the longer dated bonds and things that tend to give us trouble, but a lot of Fed speakers. And it'll be interesting to see what they got to say. I mean, you know, do they have marching orders to go out there and try to, you know, squash the market? You know, we'll have to see. But I mean, so far it's been a mixed bag. Half of them probably can't even vote. I don't know why the non-voters are even allowed to speak, for crying out loud. But, you know, we'll see what they got to say. But again, it's another day. No economic data. It's just shift the markets at all. So see what the move is in the morning. See if we can finally break out of that, you know, channel and stuff on pretty much each and every one of these indexes seem to have them. So we'll have to see. We're definitely watching closely, and I'll let you know and kind of bring more information about it tomorrow when it comes to the Dow Jones transportation, the Dow Jones itself, the S&P. Certain levels you have to break to have that Dow theory signal that was triggered like 2 weeks ago negate and stuff. So again, and with as long as the high risk stuff is the one pushing versus, you know, the conservative stuff or the defensive plays, then you really more think like, I think it was just more of a correction versus a bear market, right? I mean, that's just how we got to play it. But again, let it play out, see what happens. You know, let me know what you think down in the comments and stuff. And if you got anything out of it, please hit that like and subscribe button. I really appreciate you guys, and I'll see you tomorrow.